Let's say you've just arrived in Italy, you're excited, you're ready to start your new life finally. And one of the first things you need to do to check is to open a bank account. So you probably go online, you see a few big names, you read some reviews, you make a choice based on convenience maybe, or friend's recommendation. But this is a multi-thousand euro mistake. A bad bank partner can cost you everything. Because the difference between a great bank and a bad one is not just their logo, their presence, it's the specific features that help you manage your taxes. So let's first take a look about the banks. We use, generic names to focus on the features, not the brands. We have the global Italian bank, let's say the big traditional bank with a strong international presence. So generally speaking, they have a massive branch network and they offer a lot of services. Then we have the digital Italian bank, a pretty modern online bank. Their fees are pretty low, almost zero. Their app is very user-friendly. They're very popular with the younger expats. Then we have the regional family bank, the smaller local bank that is very personal and offers a lot of personalized services. Then we have the expats-friendly bank, a specialized bank that focuses specifically on international clients and has a lot of English language support. And then we have the investment bank, the bank that is more focused on wealth management and investment portfolio, crypto if you want, perfect for those with complex financial situations. Now, let's talk about the secret criteria. When you evaluate these banks, you must look at three things from a tax perspective. Number one, reporting for taxes. This is the most important one. Does the bank provide a clear, easy-to-read report that lists all of your foreign bank accounts and assets? This is essential for your Italian tax filings. A good report, a good summary, can save you days of work and thousands in accounting fees. A bad report can lead to a huge financial mistake. Number two is tax on investments. How does the bank handle capital gains, dividends, and interest? Do they automatically withhold the correct amount, or they just leave it you to figure out, which can be a huge headache to foreign investments? Number three is transfer fees and FX rates. Every time you transfer money from abroad, you're hit with fees and a poor exchange rate. And these costs can add up. It can eat your capital gains and make your really expensive transactions even more so. So let's see what happens when you get all this wrong. Meet the first example, let's say Chris. Chris was a financial advisor from Australia who moved to Italy. He chose a big traditional bank, the global Italian bank. He thought it would be easier to transfer his large portfolio of foreign stocks to his new Italian bank account. It was wrong. His bank changed and he charged incredibly high fees just for international transfers. He lost over 5,000 just in fees and bad exchange rates in the first year alone. But the biggest problem was the tax report. The bank provided a confusing document that did not clearly state the cost basis of his capital gains, so his accountant had to spend dozens of hours trying to make sense of the report, a service that, of course, cost Chris an extra 2,000 for the service. And because the report was so complicated, they unfortunately made a mistake in the tax filing. So the tax authority noticed the error and hit Chris with a penalty for over 8,500. All of this because he chose the bank that looked good on the service, but was a nightmare for taxes. It was simply not a good fit. Now, for our second example, this is about a freelancer who made a small choice that had a huge consequence. Meet our client, we'll call her Sofia. Sofia was a digital marketer from Argentina who moved to Italy to work as a freelancer. She chose an online only bank, the digital Italian bank. She loved the low fees and modern app. It was pretty good looking. The bank provided her with a very simple report. But when it came time to file her taxes, she ran into a major problem. Her bank did not provide a specific detailed report that separated her business income from her personal income in a way that the Italian tax authority required for her tax regime. Consequently, her accountant told her that without the correct information, she could not claim all of her business deductions. The result? She had to pay taxes on income that should have been tax-free. Her final tax bill was over $50,000 higher than it should have been. Her simple low-cost bank choice had a massive hidden cost in the long run. These stories are not meant to scare you. They're meant to give you knowledge. They show you that choosing a bank as an expat is not a small decision. It's really a strategic one. You need a partner that provides you with the right tools, the right reports, and the right advice. So before you open an account, ask the right questions. Don't just ask about fees, ask about tax reporting, ask about service they provide for expat. Ask about their ability to help you with your specific Italian financial situation.
At Studio Rigo, we provide tax and strategic guidance for those navigating international complexity with significant interests in Italy. We work quietly, precisely, and always with the long term in mind. If you expect nothing less than clarity and control, you'll know where to find us. Thank you for watching. See you in the next video.